everybody. Hope you are having a wonderful Thursday afternoon. We are going to be talking today about spreadsheets, which is one of my favorite things. I use spreadsheets and check sheets in literally every aspect of my life, and it just helps you stay so organized. And I'm excited to share one of my spreadsheets with you to be able to use in your own financial journey. The next webinar we're going to have is August 26th, the financial preview of the 2024 election. I do this every presidential election, talking about what we could expect and what we need to know going into our election. We have an amazing summer series that we've done this summer. I hope you've been having a chance to watch all of these. If not, you can go to this QR code and view all the different ones that we've got and a few more upcoming ones that are going to be fantastic. You can view those on YouTube, or you can go to your favorite podcast channel to listen to those on your drive to work or whatever works for you. The best way to stay up to date on what we're doing and upcoming webinars and events is to join our mailing list. You can do that with this QR code here or visit our website. We have 3 property tours upcoming: August 9th, August 23rd, and September 6th. Those run 10 to 4, visiting all of our top markets, and OmniKey showing us some available property that they have. Beyond that, we've got September 21st, which is going to be our next weekend tour, and then we will release the Q4 tour dates after that. If you have any questions and you want to discuss any available property opportunities, or if you'd prefer to schedule a private tour, you can contact the investment team at OmniKey Realty by this QR code, or by giving them a call or shooting them an email. Our latest city snapshots are live. Maybank is up and live, and awesome video footage of the growth and the incredible changes in Maybank. If you haven't had a chance to watch that, definitely pull that up. This is one of my favorite cash flow markets that's still having price gains, and that's just like the best of all worlds here in North Texas to be able to have both. And so real excited about Maybank. I'm actually building 3 properties there and already own there, and it's just an incredible area, and it's just an easy purchase. The price points there are under 220,000, often below 200,000. That's one of the things I love about that area. Before I get started, everything we're going to talk about today is based on my years of experience and judgment, both owning and operating a real estate investment firm and being a high-end volume investor myself, but also a property manager. I can't give you legal or tax advice. My job is to educate you and teach you the method that we have used to build our real estate portfolio and connect you with others who can help you on your journey as you determine what investment model is going to work best for you. Of course, we believe our model is the best, and we do believe that it is the right one to follow, but we are just one option of many, and our goal is to educate you and teach you how to educate yourself and be able to decide what is going to make the most sense for your financial future. So where we left off in part 1 was going through some of the formulas, how to use spreadsheets, how I use them in our real estate investment model. And what we're going to talk about today is the actual spreadsheet we're going to be providing you, what we're tracking, why we're tracking it, and what you need to be doing. For those of you that don't know me, my husband and I are middle school sweethearts, and we have about a $44 million real estate portfolio. We own multiple businesses, all pertaining to real estate in some form or fashion. We speak all over the US on TV, radio, and in person, teaching our model and our unique approach to real estate, taking the same initial capital and continuing to propel that forward to build a portfolio. We call it our 2 to 6 year model. And if you haven't had a chance to learn about that, I'd love to have you reach out, and we can send you lots of webinars teaching about how we make that happen, how we went from almost no real estate to 44 million in less than 8 years. We are so blessed to be in North Texas. We absolutely love where we are, but our goal is to educate you in how you can take the model that we use and make it work for you wherever you're investing. So before we get into part 2, I want to make sure you know, if you have not watched part 1, this QR code will get you there. You can, of course, go back and pull this up on the back end, but definitely you want to make sure you watch part 1 because it's going to prepare you for what we're talking about today. We talked about the basics of Excel and how cells, rows, and columns work, the useful spreadsheet formulas and how to maximize your success, and then, of course, Excel and real estate, why they're a match made in heaven. So if you haven't watched part 1, you can keep watching, but there's a lot to be learned by watching us break down today's spreadsheet. And don't worry, later this week, we're going to put together a comprehensive YouTube video that fuses both parts together so you can watch at your convenience and even speed it up. A familiar note, Excel is a very complicated program. There are literal degrees in schools dedicated to perfecting Excel and building spreadsheets. So obviously we're not going to be able to cover every facet of Excel during this short webinar, but it's designed to give you a leg up on building your spreadsheets like a real estate mogul. One of the biggest issues that I see when people reach out to me is they truly don't know how their properties are performing or how they should perform. Basic questions like, how much cash flow are you earning? How much did you earn last year? those questions the average person that contacts me cannot answer. And if they do answer it, they go off what the pro forma numbers should be, not what actuals are. I have one of my clients I love dearly who thought one of her properties was positive more than $20,000 a year. And when I had her go in and actual add in the data, it was actually losing $20,000 a year. And this is a property in Florida. And it really made the difference in being able to understand what needed to happen with that property in her portfolio. Instead of thinking she was making almost $2,000 a month, she was actually losing $2,000 a month. And that's the positive power of spreadsheets and why I'm so a proponent of not only having everything in a spreadsheet and monitoring it, but doing it on an ongoing basis. And of course, if you want additional lessons on spreadsheets, trying to figure out what to do with properties, make sure your numbers are right, all those things, you can always book a consult call with me. We spend about a half hour on the phone, and then I do a lot of prep beforehand, sending you intake information that I can review before we get on the call. So it's a great value. I do think it makes a huge fundamental difference for people. All right, let's get started. So what we're going to learn today is breaking down one of my spreadsheets that I'm actually going to give you, explaining how to change it to work for your properties, and giving you the download link for the sheet, as I mentioned. And this time we're actually starting with the third bullet. We're going to give you the download link so you can follow along from your own computer. So the link's going to be provided at the end. Here's the link. So I'm going to give you a minute to get your QR code out and download the spreadsheet. Now, the great thing about this spreadsheet is it's the basic. You can take it and you can expand on it to track any information that you want. Mine gets real long, and that's because I add every single little thing in there. I track every year's property valuation from the tax assessor, what the actual bill was. I mean, every little minutia of detail that I can have at my fingertips, I do. You may or may not want that much detail. You may or may not need that much detail, but this is going to give you your base formulas. So first, we're going to go over everything that I track using the spreadsheet line by line, and that's going to include going over the formulas or special formatting that I have created for certain sections. But for now, the content's going to remain blank, but we'll start filling in those fields later. Also note that when we go over the formulas in the following slides, we're going to say B9, B10, etc. B is just used as an example here, but it should reflect whatever column, that's the vertical item, you're working out of, and should change dependent on your number of properties. I believe this example has 5 properties in here, but you can certainly just copy and paste one to create more and more, and it'll still total on the right side. For example, many of my spreadsheets go from B way past Z and beyond for tracking each property. So for the purpose of this webinar, we're going to use Microsoft Office version of Excel for screen grabs, but certainly you can use the Apple version as well, which I use consistently. Again, the functionality is pretty much the same across platforms. It might just look a little different. So going line by line, let's start with the intake information. No formulas exist in these lines. They're just important for a number of reasons. You want to make sure you can sort by each of these variables, which allows for easy comparison. And it's a great, easy way to keep organized and keep your mind straight on each property. So let's start with this intake information. The property address, that's self-explanatory. That's the street address. Again, basics here, what city the property's in. The specs are useful for sorting purposes, and also when you go to relist a property for sale, look at comps for rent, look at how it's performing. I always like to know the specs, and when you have a huge portfolio, it's really hard to keep track. For square footage, that's going to be the property size, and lot size square footage is going to be the same thing. I like to put not only the percentage of an acre, so like 0.14 acre, 0.18 acre, I also like to put the total square footage. For me, especially in a lot of the areas I work, this helps me see if it's a property I should look at splitting the lot and selling off the extra lot. And then the number of units is going to be a key factor in the rent brought in, expected cash flow, and also keeping track of your cumulative. Some of these items, it's great to have the cumulative and the number of units. That's why that one is so important for me. Now, we're going to get to the good stuff. Loan balance. All of these cells are going to be necessary for formulas later in the sheet, but some of these lines are tied to formulas and don't need to be filled out. So in the next few slides, yellow boxes are the ones to designate slides that you don't fill out, and those are going to be populated by formulas later. So loan balance you're going to fill in is the current amount of your loan. And then the value, that's going to be the current value of the property. So what it's worth and what you owe. And this is really important when we get into that cash on cash return and looking at your return. One thing that I like to do is save a snapshot of my spreadsheet where it is and date it once a month or once a quarter. And then that way you can always go back and look and see where you were to where you are today. You could also make a new tab, copy the tab and make one tab the date there, and then update the new one with a duplicated tab so you can keep going. That way you can always see the process and the history of where you've been. So when we look at these for equity, this is actually going to tell you the net difference between your value and your loan balance. So you do not mess with that. It's going to automatically calculate. And then the monthly net income and the yearly net income is going to calculate based on the cells that we're going to be filling out later. And those are really important numbers that you need to have so that you can look at how your properties are performing. Now, I want to make a quick note on equity. Some of you may be asking, why are we using the equity and not the original down payment that you made to calculate our returns? And that's really important. I teach this a lot, and that is because all equity you have in a property is available and could be used upon sale or cash out. So that is money that is sitting there and has to be considered in what your return is. Your return typically is going to drop yearly, so you want to make sure you're recalculating returns. There's a disparagement between the rise of value and the rise of rents. When every year your insurance, taxes, things change a little bit, often get more expensive as the value goes up. And in addition to that, you have more and more equity because of principal pay down and often because of the fact that you just have too much equity sitting. And so really important that we look at the total equity, not just what you put down. That allows you to have the overall picture when you're comparing properties. Now, the monthly principal payment, you're going to fill this out if you're making payments on your loan. So if you have a loan and you're still making payments, you want to make sure you fill that out. The yearly principal pay down and the total yearly profit and cash flow is automatically going to calculate. Now, we've gone over in depth why principal pay down can be a huge asset in building wealth and portfolio size. On a typical 20% down 30-year note, it's about a 5% cash on cash return a year just in principal pay down. A lot of people don't realize that. And that's another benefit of leveraging. And we've done tons of webinars on that. However, you want to make sure if you are making monthly mortgage payments that you are putting in how much that principal is so you can get an accurate depiction of what your actual return overall is. Now, for a formula that's one of the golden geese of the spreadsheet, that's the cash on cash return. And the formula is super simple. We're going to go over it in the next slide. And that's going to show you if you're in the green for return or red for the return and how much so. But this is a huge prime indicator of the success of your property. The cash on cash return on net income is going to look at how much cash you are making on how much actual equity you have in the property. That's where you're going to get your cash on cash return. And then the cash on cash return on yearly profit is going to actually look into what your principal pay down is as well and your total cash on cash return. So for some more data entry that helps with organization, we want to make sure we put in who our lender is, what our loan number is, and what our titled owner is. May not be a big deal right now for you. You may have everything in your personal name or one LLC, but as you grow your portfolio, that will change. So the following few slides are going to relate to the loan and the loan terms, making it easy to keep track of things and when it might be time to 1031. Having that loan number, I get checks that are refund checks when I refinance or pay off or overpayment of escrows or all sorts of things. And all they put is the loan number. So having it organized in one place that's searchable for someone like me makes a huge difference. And you don't realize you need it until you need it. So that's why I always put that there. Now, one line item that I would recommend you add, if you're not doing 30-year fixed loans, even if you are, you might want to track it. You need to know when your balloon payment or when the interest rate adjustment is. So make sure that you're putting that with your loan information. I would probably make a new row for that. That's what I do on mine. That way you can track that and have that information. So the titled owner is going to be you, but if it's an LLC, you're going to want to put it in that. The lender is going to be who you used as a lender. I make a drop-down menu of vendors that I use, which auto-populates some of the following. And then the loan number is documented on your closing statement, and that's definitely what you want to put there. And again, if you have some type of adjustment or balloon or interest rate change, I would make sure you make a line item for that as well. Now, when we go line by line, this information that we're going to look at here is all of the purchase information, things that you're going to want to look back at and check on an ongoing basis to make decisions about refinancing, sales, and returns. So it's just more information on your loans. All of these must be filled out manually. And this is what I was talking about when I said some of it could auto-populate with the dropdown. So purchase date of your loan, that's the date that you closed on the property. The purchase price of your loan, that's what you actually paid for the property. The total amount that you paid on the loan, that's your down payment and closing costs. The interest rate that you received on the loan. Fill out the refinance loan information if you have refinanced. That way you know not only what date you bought, but when you refinanced. And then if you have a cash in or cash out at refinance, you want to make sure you're tracking that information too, because you may have a cash out where you got all of your original down payment back. So when you sell, you may only make 30 or 40,000 and it looks like it's not a great return, but in reality, maybe you had a cash out with 50 or 60,000. So that lets you calculate your overall return on a property. Now, the original loan amount is what you took the loan out for. That's not going to be used in current calculations, but this is for documenting purposes and historical data. The equity is going to look at how much equity, what your percentage of equity is. So when you talk about like a loan to value, this is what we're talking about here. It's what is the value of your loan relative to the value of the property. So this is going to automatically do that calculation for you. The loan maturity date is what I'm talking about here, when you're expected to make final payment on the loan. And the amortization is how many years that principal is divided over. So typically in consumer loans, we're talking 30 years. If it's commercial, it might be 20 or 25 years. Obviously, I always recommend 30-year loans only. And if you have questions about loan terms, you can watch our webinar, Unlocking Financial Freedom. We go over all of this, and that QR code's on the bottom right. Now, this is a great place in the spreadsheet to add any rows of things that you want to track. You can right click and insert rows below, or go to insert and insert rows below. And remember, you can always add that row at any time to track data. Just make sure afterwards that you check to make sure it didn't affect any of your formulas. It shouldn't, and it won't in this spreadsheet, but you just want to make sure. Now back to the spreadsheet. The 1031 purchase, this is where you're going to note take space for any information regarding the 1031 on this property. When I sell a property or when I'm doing a cash out, one of the first things I want to know is, did I 1031 into this property? And instead of having to go pull loan documents every time, this has that snapshot right here at my fingertips. Again, as I mentioned, I like to track the property tax, not only what my final bill was, but what my prelim is before we protest it down. And so I'm tracking last year, this year's assessed, and then the final assessed. And so that's in the spreadsheet as well. And you'll want to continue to add that year after year. Now we're going to move out of the documentation of loan piece, assessed property taxes, and we're going to get into the financials concerning the cash flow on the rental. Remember when we said we'd get back to some rows used to calculate your total monthly income? This is what we're talking about. So the lease expiration date is documentation. So at a snapshot, you know when your lease is up, how long's left on it. So when you're doing your quarterly or monthly, or even maybe every 6 month tracking, you know when you need to go be asking about comps and looking at raising rents, making those decisions. Does it make sense to sell? Does it make sense to hold? Does it make sense to 1031? The rent is the monthly rent you're bringing in from your tenant. That should include any pet fees or other extra fees. And then the insurance, taxes, and mortgage are going to be what you're paying on the property at that point in time. If a tenant is paying one of the bills, it does not go into the spreadsheet. This is for things that are coming out of your pocket. And then the other expenses are a total line item of things that we typically see on like multifamily properties. And you can add more if you maybe provide on a multifamily property satellite. Maybe you have a short-term rental. I have a couple of short-term rentals in there, and I provide internet, I provide other services. And so you can add those in there as a line item. It will calculate into other expenses and go back into your cash flow. So a quick flashback to 10 minutes ago. Once you fill out this information, it's going to fill out the monthly net income at the top of the spreadsheet. If you see your formulas are not filling out properly, this is probably why. Make sure all the fields are filled out and that rent is correctly green and bills are correctly negative in red. And that's it. This is everything that we're tracking in a spreadsheet that me and many of my clients use to track basic financial data of one or hundreds of properties. If everything's made sense so far, you just gave yourself a huge heads up on starting your own investment journey and working to increase your portfolio and net worth. And it's taken less than an hour of your time. But what you'd have to understand is that doing proper tracking is going to help you for the decades to come make proper financial decisions about your properties and know exactly how they're doing so you can make up-to-date, in the moment decisions that are going to be best for the growth of your portfolio. Now we're going to take a look at what this spreadsheet looks like with data placed inside. Everything should line up just like we spoke about, and the formulas do all of the work themselves. So this is just a fake kind of input information of fake properties, but it allows you to see what this is going to look like. Now notice when you scroll on the spreadsheet, the property address row is pinned to the top, so you're not having to scroll up and down the whole time. So first, we're going to input the data that's non-financial. This is useful for sorting or filtering. And then once you fill in the loan balance and value, the equity formula is going to automatically fill. Now make sure that you're putting the loan balance as a negative number denoted by the red and parentheses. Next, you're going to scroll down and fill out your rent roll and expenses so the rest of the formulas populate. Using that information, the spreadsheet is automatically going to tell you what you can expect your cash flow to be each month to compare against your actuals. And they're all well in the green, of course, because these are North Texas, but these are fake properties. But you never want to have a property in the red. If you do, we need to talk. So they would also tell you if you were investing in a property that was cash flow negative, and this is what that would look like. That's what you don't want to see. Now, once you fill out your principal pay down, you can see what the yearly cash flow is on your property in total, including principal pay down and the monthly cash flow coming into your bank account. You can also use this to adjust the numbers to see how much it would affect your cash flow to refinance a property. Also note that there's a total column in the far right that you can use to see values, equities, incomes, and balances across all properties. So when I say I have 44 million in real estate, this spreadsheet is where that number is coming from. Now, after inserting the data, the sheet is automatically going to show you your cash on cash return for both net income and total yearly profit. This is a great metric for comparing your current and potential properties. And again, if you're saving these and dating them at a snapshot in time, you can look back to see the historical performance of your properties and make decisions. Now, the next section of the sheet is for you to fill out manually, mostly with loan details. But again, these sections are mainly for documentation reasons or to compare lenders and terms. And then finally, you'll document your property taxes. And this can also help represent in fiscal terms how much protesting taxes helps. And then you're going to do it all over for every single one of your properties and keep it up to date on a set interval. I do mine monthly. Lots of people that I work with and mentor do it quarterly. At a minimum, I recommend you do every 6 months. And when you've sold properties, I'm going to make a sold tab, and that's where all of my sold data is going to translate with all of my historical information so I can go back to it at any point. If you do a 1031, I also recommend making a 1031 tab to track all of the information on the 1031, how much money was in there, what properties went into it, all of these pieces of information that you're going to want to track over the long term. Because remember, you defer until you die, and then that basis resets for your heirs. So once you've 1031, you're going to keep doing that process on every sale. You can also input any other information that you want in any tabs or things that you might want to track in the long run. All in all, there's a lot that you can do with this sheet as a baseline, and that's before you start adding all your own rows, columns, and fields. Again, here is the link to download that spreadsheet. Of course, this is just one of the hundreds of spreadsheets and check sheets I use to track data every single week, but it gives you an example of something you can easily build yourself using what you've learned today. Now, I want you to notice in this spreadsheet example that my team took, you can see one of these columns is in yellow. That is a watch property. That is how I indicate a property that I am watching for the potential to want to sell. If I have a red property, that means that as the lease is up, I will be selling that property. And then at the top line, I actually add a notes section where I put my comments as to why, so I don't have to go look at that information again. You're going to find little tips and tricks that work for you on how you track your properties and how you know what's coming and what you need to be focusing on in the future as those properties come up so that you don't have to look and analyze everything every single time. So again, don't wait. Excel, Sheets, Google Sheets are all products that anyone can have access to, and it's going to change your financial future. If you want access to all of my spreadsheets and all of that data, our Wealth and Rentals mentorship program is a fantastic opportunity. If you haven't talked to me about that, I'd love to talk to you. For just a few thousand a year, you get 24/7 access to me and Michael and all of our mentorship. Now, if you haven't joined our free Wealth and Rentals Facebook group, this is a great way to have education, ask questions, get other experts answering questions for you, have market data updates all the time. It's an awesome group on Facebook of like-minded investors who love the power of real estate. So if you haven't joined, please do request. And then again, if you want to schedule a consult call with me, I do those Monday through Friday. I'd love to talk with you and see how I can help you. This is the link to the podcast if you want to go back and watch any of our previous webinars or listen to it on your drive to work or while you're working out. And of course, stay up to date on social media. I am extremely avid on Facebook and the other social media platforms, posting about our investment journey, our properties, our builds, everything to do with the market, and hope to see you there. If you still have questions, you can contact us by email at the website or give us a call. Thanks so much for watching. Hope you have a wonderful rest of your Thursday and a safe weekend.